Germany's robust economy has been driving growth in the German non-life insurance market and is one of the reasons why AM Best has published a stable outlook on the sector. I'm Yvette Essen for AM Best TV and I'm joined by Konstantin Langowski, financial analyst for AM Best. Obviously there are a number of drivers behind our stable outlook on the German non-life sector, but can you explain to me a couple of the reasons why we've published this outlook?
The two main reasons why we published a stable outlook have really been the solid technical performance we have seen in the German market over the past years. The main two segments, the motor and the property segment, which account for about 70% of the market, have been profitable over the past years, largely supported by good premium increases in each of the last years. A second point that supports the stable outlook is the strong balance sheets of the German non-life insurers.
And traditionally they've had very high solvency margins, haven't they? Solvency capital in excess of 280%?
That exactly. The German market compared to other European countries has always had very strong solvency ratios, which is supported by the overall profitability which we have seen in the market over the past years.
One thing we're talking about here a lot is profitability, technical profitability, but what we understand is that Nat Cat plays quite a key role in providing volatility to balance sheets. Can you tell me a little bit about the Nat Cat loss experience over the last few years?
The German market is exposed to natural catastrophes, mainly hail, wind and flood events. However, in the long term, AM Best expects that there could be some volatility in the market due to the exposure to cat events, as for example in 2013, when there were a number of large cat losses which impacted the market and pushed up the combined ratios above 100%.
Let's talk about digitalization. One of the trends of the German non-life market is to use technology. Can you tell me a bit about that trend?
We have indeed seen some advancements in digital technology and digitalization among the insurers, the non-life insurers in Germany, which is largely driven by changes in customer demands. Traditionally, the German insurance market has not been the spearhead of innovation. However, due to generally changes in technology and the change in customer demand, especially the larger insurers have started to embrace technical innovation and digitalization.
And what does AM Best think of this? What will happen to companies that are able to successfully embrace technology and change?
AM Best believes that companies which are successful in their digital evolution will likely benefit from lower cost, better policyholder retention, as well as longer-term success.
The low interest rate environment has of course been a concern for European countries. What about the German non-life market? How is that responding to the low interest rate environment?
The low interest rate environment has been a phenomenon over the past years. However, the German non-life insurers are not reliant on investment income, as their technical profitability has been very good in the past years. Nevertheless, we have seen some shifts in asset allocation in order to enhance yield over the past years.
A copy of AM Best report looking at the German non-life market can be found on AM Best website, ambest.com. For AM Best TV, I'm Yvette Essen.